All right, welcome on board, folks. We're going to get started here in a few minutes with our special presentation tonight. And I'm very excited to have my friend Lauren Cohen on the call. How are you doing today, Lauren?
I'm pretty good, much better than it was earlier. Thank you for asking. How's everybody in webinar world today?
Well, I don't know. We'll find out. So we got people on board.
How are you, Dave?
I'm always great. So we got Bob and Frank and Jeff and Jenny and what else we got? Lila, Luba, Lucci, Paul, all in alphabetical order. Funny how that works. Tony, William, and more people coming on board. So you guys, go ahead, just type in the question box, say hi, let us know where you're calling in from tonight, just so we can give you a little shout out and make sure that we're not talking into cyberspace, that people are actually able to hear us and see us. So go ahead, type in the question box so you can find the question box. It's going to be as interactive as we can make it tonight, given the constraints of GoToWebinar. But go ahead, type something in there. Luba's saying hello from Toronto. Hello, Luba. Welcome. Good to have you.
Luba has a very interesting job. He is an Air Canada pilot, so he can keep you updated of what's really going on.
And Tony's calling in from Toronto as well. Frank from Quebec City. Luba says,
Don't tell anybody, it's a secret.
yeah. So you guys go ahead, type in the question box. And then also, if you want to, let us know if you're already investing in the States or you're just kind of tiptoeing around trying to figure things out. So that's what we're going to be doing. Hey, I see Scott's with us. Welcome, Scott.
If you got, how we doing?
We're doing good, my friend. So you can go ahead, share your webcam if it's working.
Trying to. If for some reason it's not working for me.
Well, we might just have to imagine.
That's just incognito.
Yeah, I'll reboot real quick. I'll just rejoin.
Thank you.
All right. So, yeah, Scott was on with us in two areas as well. So again, welcome everybody. I see a lot more people coming on board. We're going to get started here in a minute. Tonight's presentation, cross-border investing made easier for Canadians.
It's never easy.
That's the whole goal. So I'm Dave DeBow, and it's my pleasure to be hosting tonight, but I'm sure as hell not going to be the one doing the presenting, because I got two very, very sharp guests on the call. One of them who's with us right now, the other one is trying to join us. So Lauren Cohen is a very experienced person in both law and real estate. So Lauren is originally from Canada, from Toronto, if I'm not mistaken.
That's correct.
That's right. Now living in the sunny South. And she's a lawyer up here. She's a lawyer down there. She's a realtor down there. She's a real estate investor down there. So you name it. Lauren's got some experience about it when it comes to cross-border investing. And then Scott, who's going to be joining us as well, very, very accomplished lawyer and real estate investor himself, who has a ton of Canadian clients. So between the two of these guys, they know a heck of a lot. So Bob, welcome from Ottawa. Happy to have you as well. Paul says, I cannot hear anything. Well, Paul, everybody else can. So I'm thinking, I don't know what the situation is.
Your microphone or your speaker or something.
I can't really tell. So, okay, welcome you guys. We're at the top of the hour, so let's jump in. Lauren, how do you think this is going to work best? Because we had a ton of questions come in from people. We may or may not be able to get through all of them, but I know that you've got some kind of common, frequently asked questions.
Sure.
How do you see us getting through a good chunk of this tonight?
Well, I think what might be useful, since Scott, is Scott back on yet?
Yep, I'm here.
Okay, great. So what I did prepare a few slides, but that doesn't necessarily mean that we have to show them. Scott has his little whiteboard because he loves doing charts, and I love asset protection lawyers to do charts to make things simple. So I'm going to quickly show my slides.
It's pen and paper, so I love it. There we go, old school.
Well, no, it's not paper. It's a special whiteboard he has. Funky, very funky. So he's a very technologically advanced guy. So anyway, thanks for having me. I love Dave, I swear, actually, we have a mutual client that's on the call that heard me speak at something with you in August, and now he just hired Scott today. So imagine that. So I'm very happy to be here. I love working with Dave. I love working with Canadians. They call me the Canadian Whisperer. I'm going to quickly show you a few slides. I'm here to help you guys both create your investment strategy and start the investment process, make sure that you're covered legally, potentially handle your immigration matters. And I have partners like Scott and another mutual partner, or a couple of actually mutual partners that handle cross-border tax. So just so you know, neither Scott or I is a specific tax expert, but we know enough to get in trouble. Okay, and I'm going to defer all my questions
Well,
to
hopefully you
Scott.
know enough to get people out of trouble. That's
Hopefully, yes.
All
And we
right.
know enough to know, one of the things that we both are very, very specialized in is knowing enough to know when we don't know the answer. And it's really important to understand that you need to be able to defer to quality vetted people to know the answer instead of guessing, because guessing is going to get you in trouble every single time, whether with the IRS, whether with the CRA or whatever. So I am going to quickly flip over to my slides, I hope. Can you guys see my slides now, Dave?
Yep.
Okay, perfect.
Yep.
So my presentation, again, I'm going to go through it super quick, is just about how you can invest, live, work, and play across borders. That's my tagline. My company is called eCounsel Global. You can find that my website, ecounselglobal.com. You can also find me at Immigrate Through Real Estate. Imagine that. So I want to just make a disclaimer, because even though I am a lawyer, I'm not really presenting this as legal advice or legal guidance. You have to speak with a specific attorney, hire an attorney in order to be to rely on that as legal advice. Okay. How to invest in real estate across borders. So I'm going to, at the end of this presentation, Dave's going to share a coupon code with a link to an ebook I wrote called How to Invest in Real Estate Across Borders. I should have added the Made Easy, or EZ in Canadian, which everybody here makes fun of me for. And these are basically the top 8 elements to ensure success when you're investing across borders. Now, just like with anything, it's always about location. Real estate is always about location. Where are you going to invest? Why? Are you going to invest near where you live? Are you not? How's that all going to look? Creating short and long-term goals. Those are really important. Everything in this, all 8 of these elements, by the way, are interconnected. If your short-term goals do not match your long-term goals, or if you don't consider your long-term goals at the beginning, you're going to end up compromising those goals, because you're going to look at, oh, let's just get set up, or let's just invest in our personal names, and then you have to go and fix everything later. The third item is property types. What types of properties do you want to invest in, and why? It's going to be connected with your short and long-term goals. I'll show you a quick slide about the many different types of properties. A lot of you know them. What's your entity choice? Is it a limited partnership? Is it an LLC? Scott is going to address that in some detail. He is just incredible, and he really understands the needs of Canadians. I think about 30% of his clients are Canadian, and that's growing every day because I'm sending him a lot of clients. So invest alone or with partners. So a lot of Canadians like to joint venture, especially with other Canadians that already have properties in the US and might have access to financing. But then again, then you can work with Dave, who's going to give you ways to find other capital, which is why I invited some of my clients on the call. But you can definitely, even with access to capital, you can still joint venture, you can still partner. Maybe you want to create a real estate fund. Maybe you have others that say, oh, I want to invest with you. I want to jump on the bandwagon with you. Well, we can figure that out. We may need to bring in a securities attorney. Whatever the case is, we'll get it done. How to purchase properties. Do you want to buy them outright? Do you want to buy them subject to? Everybody wants to buy subject tos. And they're going to be available in a big way in the next 6 months to a year, I would say, here in the States, because forbearance is going to come due. They're not going to be holding off on mortgage payments, and people are not going to be able to pay their mortgages. And then, of course, there's different, strategies: the BRRRR method, the flip method, the buy and hold, wholesaling. Some of these qualify for visas and some of them don't. So again, that's why your short and long-term goals are so important. And then your immigration considerations. Number 7, do you want or need a visa? Now, one thing to remember, just because you get a visa does not mean you have to move to the US. Getting a visa is often about giving you options. And that's what I love about the E2 visa, the treaty investor visa, which is based on an investment, a substantial investment in a non-marginal business, because it gives you flexibility. You can have this visa, you're never going to have a problem at the border for the duration of the visa. but you don't have to move. You can remain a Canadian taxpayer, you can remain a Canadian resident, or for that matter, you can be a resident of Spain, like a colleague of mine who happens to be an immigration lawyer that has been in Spain since COVID started and is in the US on an E2 visa from Canada. And then how to choose the team members. So I'm going to quickly flip over to the next slide, which is about those different team members. And these are all equally important, and you have to consider all of them as you're investing across borders, and make sure that they're vetted and that you can rely on them. We bring together this whole team. It's a holistic approach that we have so that you don't have to think about Googling. Who gets to the top of the Google ranks does not mean that that's the best provider, does it? So just, pulling together this team of banking professionals, a legal team, which includes Scott, which includes immigration, which includes potentially securities, if that's the way you want to go. There's all kinds of different types of considerations when it comes to legal. Maybe you need to use some Canadian counsel to make sure that your estate in Canada is protected properly. You have to do your due diligence and a deal analysis of each deal, of each opportunity. Does it make sense? Are you qualified to look at it? Do you need to hire somebody? How does that look? Then you need tax, financial, and accounting professionals. All of these are important because you want to protect your money and you don't want to pay it to the CRA or the IRS as you're making it. Logistics. What are the logistics involved? Again, this comes back to like looking at location. Do you want to be near your properties? Do you care? Do you need a property management company if you're not? Financing and capital advisors. Well, here's where Dave comes in, or other options for financing, or a mortgage company. And do you want to work with a Canadian bank that has an American presence or not? Real estate professionals. Yes, you can get off market listings, but real estate professionals are always going to lead you in the right direction. Well, maybe not always, but hopefully they're going to lead you in the right direction. And again, it's all about making sure that you have somebody that holds everybody else accountable. That's the way I like to do it, and that's my specialty. And then again, of course, in all of this is your cross-border experts, because one of the things that way too often happens to Canadians, specifically Canadians, is that American companies go into Canada and they're like, okay, this is how you do it. And they don't care about the fact that, no, that's not how you do it in Canada. So you go back to Canada and the CRA is like, oh, we're going to ding you for this and this and this and this, and you didn't anticipate it. It's a nightmare, okay? So just, important to understand that you need somebody that gets it on both sides of the border. And that's really, really important, especially for Canadians that are going back and forth usually. And all of this stuff that we're talking about is usually because obviously COVID impacts a lot of it. And then, of course, you have your real estate investment types. Now, all of these could potentially qualify for immigration status, except for a REIT, real estate investment trust, because that's truly passive in nature. So, and they can qualify, but we have to make sure that we set them up to qualify and so on and so forth. I'm not going to talk specifically about how real estate can qualify, because what I think what's going to be much more effective here is for Scott to do a presentation and then us to interactively address the 10 questions and all of the questions that we received through Dave. So I'm going to turn it over to Scott, and hopefully I'm going to stop my screen share, I hope. I think.
All right, Scott.
I'm making you the presenter, Scott. I hope I did that right.
All right, Scott, are you going to be doing your little whiteboard thing there, or what are you going to do?
I am going to do the whiteboard. I actually have it on a separate camera, so I'll just flip the camera around, so I won't need to do a screen share to be able to help do that. So, everybody, my name is Scott Royal-Smith. I'm the owner of Royal Legal Solutions. I'm an attorney here based in the United States. We help about 2,000 real estate investors all over the country in 50 states, as well as people investing internationally inside of the United States. A large growing portion of our business is actually helping Canadian investors in particular, because of the advantageous nature of real estate right now in the United States, that more and more Canadians are interested in coming into the United States and investing here. As just like a top line item that we have is like, hey, is real estate actually the right asset that we should be looking at into it? And right now, I think that there's an opportunity like never before in real estate, and it's all artificially created because of the stimulus that the government has actually put out, right? So we just signed another bill here in the United States to inject an additional $1.9 trillion into our economy. That's on top of all of the money that we already put in. So from the money that we have already put in, people have actually hoarded that money. Our savings rates
Mhm.
are higher now than they've ever been, right? And we just injected an additional $1.9 trillion into the economy. So what's going to happen is that we're going to find that money, once the COVID scares are over and people are back to work and economies and the businesses are working again, that people are now going to be less afraid, which means that now they're going to spend all of that money, which means that we should expect a rapid influx of money to happen over the course of about a year, right, once the COVID pieces are over. So however strong you think the economies might be now and what's going on with real estate prices now, it's just the beginning of what will happen here in the future. So buying real estate inside of the United States right now is a gold rush. I actually am just looking at opportunities left and right, and my investor friends that are inside of real estate, been in real estate for 20 plus years, are like, hey man, can I buy anything wrong right now? I feel like whatever I put my money at, it's going to double up with inside of the next year and a half. Just looking at some of the basic fundamentals of the economics of what's happening. And so that's what we're really focused on, is saying, great, we have an idea of saying that, hey, we think real estate is actually a really strong investment for everybody. And we're still feeling really bullish on that. And so great, well, how do we take advantage of that opportunity, right? So the number one things that Lauren has looked at here is, as part of the immigration pieces that she looks at, is saying like, well, we know we want to buy some of these assets. And once we can identify how we want to buy those assets, there's a number of different types of assets you can get into. And there's a lot of different ways you can do, and there's ways to get into real estate for everybody. That's going to be a comfortable way of being able to start acquiring those assets. The next thing you have to do is say, well, great, now how do I make sure that I'm protected so I don't lose that asset from a lawsuit? As you might know, the United States is a very litigious country, and we have unlimited liability here in the United States, which means that a single lawsuit that can sue you for as much money as they want to with that, and you have unlimited liability associated with that. So what we do is we have strong insurance policies, and then we also do this other thing that we call asset protection, which is entity structuring. And that entity structuring is there for us to be able to say, no, we hope that the insurance company pays out to protect us, and we hope that. But what we know is that insurance companies are profit-seeking corporations, and that that we can't rely on them to do that, especially when claims get very expensive. And that's where we use asset protection tools to cap our losses, to say that even in the worst case scenario, we know we're going to be okay. And the goal of my firm is always to put our clients in a position that says, we do such a good job at being able to create anonymity in the asset, so it makes it look like you own nothing on paper. So guess what? If you don't, it doesn't look like you own anything, people that don't look like they own anything don't get sued. So we always hope that that lawsuit never gets filed, and we want to make it look like you're a really bad opportunity for them to come after. And then number two is that if you're sued, you lose little to nothing because of the protection and the structures are there. And then lastly, we want to do that in a way that doesn't cost you time, and it doesn't cost you money, right? And so there we're looking at saying, like, what's an easy thing for us to maintain in terms of our time commitment each year, in terms of our yearly fees associated for like additional state fees or governmental fees, and most importantly, and the biggest ticket on here is taxes. Are we streamlined for our taxes and saving money there from the CRA if you're on the Canadian side of the fence? So that's the big why behind asset protection, and also why is asset protection with a professional service really worth it? It's because it's how you ensure that all the I's are dotted, T's are crossed, that your tax is going to be set up in the right way, and that all of your compliance is done the right way. So that way, if you're ever triggered to actually need to use the structure for your defense, that it's been properly maintained. Because if these things aren't properly maintained and you don't run them correctly, guess what? You can spend a lot of money on doing something and it doesn't work. So let's dive into a little bit about the details of about how this structure works. And I'm just going to flip the camera real quick, and so that way you guys can all watch me diagram it out. So what we're typically looking for when we're doing an asset protection structure for a Canadian investor is we're doing a couple of different things. I'll tell you first, what we're not going to do is we're not going to use an LLC. And who knows why we're not using an LLC? Anybody know that one? It's because LLCs in Canada are taxed at a corporate tax rate. And what do we hate more than anything else? It's corporate tax rates. So what that actually means is that you don't want to be using LLCs as your as in any part of your structure if you can possibly avoid it, because the moment that you do, you're potentially subject to being responsible for paying corporate tax rates. So on the US side, what we use instead is this entity that is called a limited partnership. And the cool thing about limited partnerships is that they provide the exact same protections that an LLC does, but you don't get hit with corporate tax rates. So under your limited partnership, what you can do is you can own this limited partnership anonymously, and you can also own all of the assets underneath your limited partnership anonymously, because remember, people that don't look like they own anything don't get sued, right? So that's what our first line of defense is from any lawsuits that we're looking at. So what we do is we take our limited partnership and we establish what's in the United States, what we call a land trust. With this land trust, it allows us to own the property anonymously, and it also allows us to take advantage of something called avoiding something called the due on sale clause of any mortgages. So this means you can actually buy the asset with the absolute best financing, and then you can transfer it into the land trust, and you don't have to worry about the bank having any problem with you transferring the asset, because a land trust will avoid the due on sale clause of your mortgage, right? So this is really a big cost saving measure for you, because you're going to get better financing rates because you'd have this land trust. Now what you do is that you simply hold the property underneath the land trust. Yeah? And because the property now, and when we look at the deed record, the property will say, hey, this property is actually owned by the 123 Main Street Trust. Well, we don't know any more information about that trust, because everything about that trust relates back to a law firm and attorney, and all that information is further protected by the attorney-client privilege. So anybody looking to say who owns this piece of property on paper can't link it back to you, the client, to think like, hey, maybe this person is a good person to sue. Now, let's say that they sue the property anyway, right? And I say, hey, grandma got hurt on the stairs, and we are going to sue this piece of property regardless because we're really mad, you know? So what happens is they sue the trust, and then the trust is, and the liability generated here is blocked by the limited partnership. So you know what they're not able to do? They're not able to go after you personally. So any of your personal assets or other assets are protected. The only thing that they'd be able to go after is just this one asset, because the limited partnership structure here is what caps it and stops it from being able to go after anybody else. So in a limited partnership structure, you, the client, are what is deemed the limited partner of the limited partnership. And also with the limited partnership, what you have here is called a general partner. And this is where it's going to blow your mind, guys, because you're going to say, Scott, didn't you just violate the first rule that you laid out for us here in the very beginning? Because I'm going to tell you, on the general partner, what you're going to establish here is going to be an LLC or a C Corp. And inside of a limited partnership, any actions taken by the limited partnership, it's only the general partner that's liable for those actions, not the limited partners. Yeah? So what does that mean? That means that all of the income and all of the benefits flow to you as a limited partner, and you don't have to pay any of the extra tax on that, but you get all of the protection of the limited partnership. And if there's any liability, possible limited liability that comes out of this, what's going to happen is that's going to be held by this LLC or C Corp, which doesn't own anything. So their worst case scenario is they can attack an entity, but the only thing they're going to be able to attack here is an entity that doesn't own any assets. Now remember, we talked about here was our corporate tax rates. Guess what? All of the money flows from the house and then up to the limited partnership and then out to you. And then guess where the money doesn't go? It doesn't touch this LLC or this C Corp. So for tax purposes, all of the money is treated as a disregarded entity or a pass-through entity, and therefore we don't violate our rule here, because the money never touches an LLC, but all of the liability will rest inside of this LLC over here. And the best part, guys, this is totally legal. This is not a gotcha, a fringe attorney type of shady deal that you might hear about, right? This is all in the up and up best practices of what we do for liability and tax protection at Royal Legal Solutions. And we've been doing it for over 5 years for over 2,000 investors. And you might be thinking to yourself, holy smokes, is this too good to be true? And you're always going to think that when you're working with high-level professionals. If you're not working with high-level professionals that are blowing your mind about like what is actually possible and what best practices look like at the top of the game, you're not working with high-level professionals. You're working with somebody who's mid-tier, right? And that's the way you should feel when looking at some of these advanced strategies. So let's say that you actually look at buying an asset, like a lot of our clients do, right? They're looking at buying assets. One way to do that is you could just acquire it directly inside of the name of the limited partnership, right? Nothing wrong with that. You can acquire the asset directly in this entity's name. Some of our other clients, like we talked about earlier, are saying, well, actually, it looks like I can get better financing rates if I acquire the asset inside of my personal name first for whatever financing I'm looking at. It's like, great, that's not a problem either. You can just acquire that asset inside of your personal name. And then what we're going to do is create the land trust and then create a warranty deed to transfer the asset from however you acquired it inside of your personal name here. We're going to transfer it into the land trust, and so then it's now held by the limited partnership into it. So no matter what type of financing or what type of asset, you're going to be able to find the way to be able to hold that asset in a way that's protected. You're going to be able to hold that asset anonymously, and you're also going to be able to always be able to take advantage of the best possible financing and have the best possible tax advantages for it. So that's how, in a nuts and bolts 10,000 foot view up, about how this type of entity structuring works and is the ideal structuring for the Canadian investor. And for anybody worried about how this might relate to their estate planning, the good news is that you can always take this limited partnership and use that in conjunction with any of your estate planning tools. You can use this with your living trust, or your pour over wills, whatever the case may be. You're not going to have any type of inhibition when coming into what are the other legal ramifications that are going to come about for how you might have planned for your estate or taxes. It's extremely flexible, and we have experience working with other counsel across the border and domestically about how that structuring would work depending upon your particular situation. So that's what I had wanted to talk through. It's just a high-level view for everybody. Should we start to look at some of those questions maybe?
Yeah, we can. Good job, Scott. Thank you very much for that. Let me just, I'm trying to walk and shoot
Now
down.
you can see what attracted me to this gentleman. There's a lot of asset protection lawyers, just like there's a lot of every kind of lawyer. But what I like about Scott is the way he simplified it. And I just realized that you were writing on paper. I'm in shock. And that's not shocking. I'm writing on paper, but I'm only making notes. But yeah, it's really important when you're working with people that are dealing with cross-border that you are working with people that are dealing with cross-border, and it's not their first rodeo, because dealing with Canadians is different than dealing with Americans, and it's really important that you guys focus on that difference. Canadians are not Americans. Some of us are dual. You'll forgive me. I'm wearing my Canada shirt though, by the way. I did that on purpose for everybody. I only have like 100 Blue Jay shirts in there. So anyway, Dave, over to you.
Yeah, you guys, well, thank you very much for that. And I'm sure we're going to have a ton of questions. A ton of questions have come in. I think one that kind of relates to what you were just talking about there, Scott, is we got somebody here asking, how would that structure work if you were bringing on, let's say, other Canadian investors to buy property in the States? How could that structure that you're talking about there work in that case?
Yeah, so what you would do is that you
It's
just look,
upside down, Scott. Oh, there you go.
yeah, what you do is that it's right here. It's who are the limited partners. So
Mhm.
this could be one people, this could be multiple people coming into it.
Perfect.
And then so what you would do is you designate inside of your limited partnership documents all of the different investors that are there. We would probably also consult with a US based securities attorney to ensure how you're entering into this deal with other investors. If there's any type of fund arrangement that's going on, you may need to consult an SEC attorney with that. But if it's, if it's under, if it's just a few people and they're your friends and family, especially if they're wealthy, you're typically never going to have a problem with that.
Yeah, okay,
And the other
perfect.
thing is that each of them should probably have independent advice as well, just to make sure that their structure is set up properly so that so that whoever should be the limited partner is the limited partner.
Okay. A big thing that a lot of people are worried about is double taxation. So getting whacked in the States and then bringing money over here, getting whacked again. I know you guys aren't accountants. However, I think you've been around that, or you know enough people, you've seen enough scenarios. How do Canadians avoid getting the double taxation? And we got a ton of questions coming in live here, so I'll check those
I
out.
have a feeling Scott's gonna defer to me.
Yeah, Lauren, go ahead.
I knew it. Okay, so double taxation, the best way to make sure that you're not double taxed, you have to be very clear about where your residence is. That's really important. If you do have an E2 visa, you need to keep track of exactly where you are at any given time. And you have to, whatever you do, I will not work with anybody. I did in the past, but now I won't work with anybody that does not get cross-border tax guidance, no matter what country they're from. Because at the end of the day, I'm not a tax
Well,
expert.
we're probably talking about people who are not planning on immigrating to the States.
It doesn't matter either way, if you're immigrating or you're not, you need that cross-border tax guidance. Like the model that Scott was sharing is ideal for people that are immigrating or that aren't.
Where do they go for that tax guidance and what's the
To
general
me,
rule? Well, then,
so you
yeah,
need to get somebody, so honestly, there's a lot of people in Canada that are licensed in Canada that prep people for US immigration or for US investing. That's great, but you still need a US person. I have colleagues on my team that are Canadian and US licensed, so they're tax experts on both sides of the border. And to me, that's the best way to go because it's seamless. And they'll look after you when you're here. They're not going to say, okay, well, I gave you your advice. Bye-bye. Have a nice day.
okay.
Yeah, and my understanding, Dave, from it too, and my experience has been that the limited partnership structure that we laid out here is the ideal structure to avoid and minimize the taxes, right? So
Right.
of the number of CPAs we worked with that are cross-border, I also highly recommend working with a team of people that are going to be able to ensure that, right? A lot of times what we find is that without the full professional team, what happens is that we can people will get set up right for what's going on right then in their life. But then what they don't do is think that anything might change for them or implications of it if any of their life events change, right? Because they don't know what triggers different considerations that they might have. So my advice is always to say, great, if you have a limited budget, that's fine. Just budget out like an hour a quarter to be able to go meet with your team, right? And then say, great, if I can few $100s or whatever the case may be, is going to potentially save you tens of thousands of dollars if you happen to screw it up, right? So this is really like a tripping over pennies on your way to dollars kind of scenario.
So
It's like,
true.
if you can't afford a lot, that's okay. You should pay something and make sure you're paying something to some professional that's going to give you advice, and that's infinitely better than you thinking that you have it handballing around.
Stay in your lane.
Yeah.
So you guys, whoop. So Lauren, I put in your link in your coupon code, and I got a bunch of people saying the coupon code doesn't work.
Huh?
So
It must have been a mistake. It's REI with the number 4 free. REI 4 free. I had like at least 10 downloads today alone, so maybe I just missed a digit or something. Is that what happened?
Yeah, so it should be FREE, you guys.
Yes, correct. Sorry about that.
All right. What else we got? Eli's saying, Lauren started out by saying that Opportunities will be available in 6 months once the forbearance is lifted. Scott's saying that you can't buy anything wrong and the market will only shoot upwards. These statements seem to contradict one another. Can we get
No,
clarification?
sure. So I'm saying any time is a good time to get into the market. But right now, the subject twos are going to open up probably in 6 months to a year when the forbearance period ends. Now, forbearance is different than forgiveness. So forbearance, for those of you that don't know, and I apologize, I should have clarified this. Forbearance is something that they implemented in the US. Scott, I don't know if they ever did this before COVID because I wasn't here, so I don't know. But they implemented this forbearance process or approach for COVID, and they keep on delaying it. Now, forbearance means that you don't have to pay your mortgage, but it doesn't mean that it gets flipped to the back end of your mortgage. It just means that you don't pay it for that period. So guess what? I decided to take advantage of it for 3 months or 4 months or something. All of a sudden, month 5, poof, I owed 5 mortgage payments. Okay.
Oh, so it's cumulative, like you have to pay all of it all at once. Is that what you're saying?
Exactly. And this is a problem. Now, not every bank is going to be the same, but that's why, according to, my real estate teams, we all feel that 6 months to a year. I thought it would be by now because I didn't know that they were going to keep extending the forbearance. The forbearance is also the thing that prevents, or it's kind of related to the non-eviction,
Right.
the hold on. So it's the same concept. So what Scott is saying, and he's 100,000% right, is there are opportunities where I'm getting opportunities on my desk. I have 48,000, soon to be 49,000 agents that are sharing opportunities, and Scott will be part of this very soon. And it's just amazing. Like, you're just seeing things and people are acting because everybody wants a piece of it. I've never seen so much activity ever. And Scott's getting a lot of it because I keep bringing him clients every day. It's like, wow, he didn't know that I would be so popular,
All right, so next question. We got lots of questions, you guys. I'm gonna hassle you along because we don't want to be here all night. So we got Daniel saying, I understand the LP
Land trust.
liabilities and limited partner collects the profits, but is the limited partner taxed by the CRA? Would that be foreign income, which is now taxed, which is taxed how? Sorry. So anybody have any insight on that? Again, you guys, these guys are not accountants or lawyers, but they've got a gist of it. So can either one of you light there?
I am going to say that the CRA will tax the entity, but this is definitely a tax advisor question. And that's why the structure is so important, because if you set it up this way, your tax liability is going to be minimized.
Okay, and then Eli's asking, how does it handle owning multiple properties? Do you have to repeat the structure for each property? And then, more or less, how much is it gonna put you back?
Mr. Smith.
Yeah, so typically what you're looking at for this, guys, if you looked at a limited partnership here, let me see if I can get this to focus back in here for us. Yeah, so what we're looking at is here is this how we have it like for one property, right? Typically what we want to do is hold no more than $500,000 in equity in any one limited partnership structure. And what we typically would do is say, great, if we're underneath that threshold and all of these assets are inside of the same state, then what we'll do is we'll just create additional land trusts, and then we'll just hold additional properties underneath these additional land trusts. The disadvantage to doing this is if I have a lawsuit against one asset here inside of one limited partnership, they can go after all of the assets of the limited partnership, which is why we cap the amount of equity here, right? So if you're really risk averse, what you do is you lower this number and then you hold fewer properties in any one limited partnership. Or if you're buying multiple assets in different states, you do one limited partnership per state where you're buying the asset. In terms of total costs that can see these for the limited partnership structure and the LLCs, I see ranges for what this can cost, and depends upon your particular situation and that you're going on about like what is going to be the total cost associated with that, right? On the complexity. I see these typically ranging anywhere between $4,500. We had a client today that came in that said he paid another professional $12,000 to put this together, right? So what we're always trying to do is to find ways that we can simplify and then save everybody money to be able to help as many people as we can. Because what we're on a mission to do is to help as many people as we can to financial freedom, because that's what we believe people will start to live their best lives doing, right? So that's our fundamental mission of our company. So we're always looking to be able to help people save costs on here, figure out, okay, what's your risk tolerance that you think is appropriate here? We have benchmarks like this $500,000 number that we use that's true for most investors. And then also, how do we simplify how many limited partnerships you need based upon how many assets that you have and what states that you're investing in. Fair enough?
Yeah, that's fair enough. So you guys, again, there's not a one size fits all kind of thing here. So book a call with these guys if you want more information. I put the links in the chat box there. So I think, Scott, I put the link in there for them to book a call with somebody on your team. I don't believe there's a cost for that. I might be mistaken.
No cost to book a call with the team, and then to sit down and for us to go through your personal situation and see what our recommendations would be and the exact price points. After those meetings, you're going to be able to know exactly what it's going to cost you, both as like an upfront and an ongoing cost, and what the support is after we set it up, which is something that we pride ourselves on, that we don't just set people up and say, great, you're on your own unless you pay us $500 an hour to talk to us. We try to get everybody in to be able to say, great, we set you up and we'll help you maintain it, and we'll help you answer any questions that you have on an unlimited basis ongoing after that. So you really have a true team that just the average person can have expert level advice. And we're able to do that because we're so niche and so specialized.
Very cool. Lauren, we got somebody asking for your website. So go ahead and type that in the chat box to everyone, if you would, please.
When I put something in the chat, is it actually going to everybody? Because it looks like it's. Oh, I see. I did it wrong. I got it. Now I got it.
Right. Perfect. Okay. So Jason, hopefully that kind of answered your question, because that's the ideal amount to invest while using this structure. So that answered that. Does limited partnership mean passive investing? What about active investing on the general partner's part?
Yeah, so limited partnerships is a type of entity structure, right? So a limited partnership, right, as an entity structure, can own active investments, which would be like flipping or like a business. It can also own passive investments like your single family homes that are, that you're buying and that you're just leasing out, typically holding those for more than a year. What a limited partner is of a limited partnership is where they're passive members to the limited partnership, right? A general partner is the active component of a limited partnership. And that's why the active component in the US litigation, right, is the one that bears all the liability.
Okay, very good. Oops. Just trying to send stuff here. Everybody, hopefully. Yeah, Lauren, you keep sending it just to the panelists, so you got to make sure you click on.
I did. It says organizers and panelists.
No, that's just us.
Oh, that's wrong. Okay, it doesn't give me any other option. It says presenter, organizer only, organizer and panelist.
But maybe not. Maybe I'm the only one that can do that. Okay, I think we got it there.
I think you're in charge, buddy.
Lila asked, is Scott's structure the same regardless of the state that you're in?
Yep, it'll always be the same, because what we're worried about here is the tax implications that happen to you on the Canadian side. For our domestic and fully domestic clients, and there's no Canadian component to it, we use other structuring that's going to be provide better protections and more efficiently. But for the Canadian side, you have to consider the taxes as a primary concern, because the taxes will always outweigh the costs of the additional structuring.
And once you do, if you end up becoming a resident, then we can modify accordingly. And right. I put something also, like, one of the things, again, that I'm going to reiterate, which I mentioned at the beginning, and this is really important, is getting a visa, getting a non-immigrant visa, which is one of the most common ways that Canadians access the US market and visas, does not require you to live here in the US. You don't necessarily become a US taxpayer. So there are, but yeah, you have that flexibility. You get a US Social Security number. You can open a US bank account. You can build US credit. So there's a lot of advantages to getting this visa. And as you're building your net worth and your portfolio in the US, it can be really advantageous.
Tana asks, does your Canadian corporation need to hold the Canadian partnership?
There's not necessarily a Canadian partnership. So there are definitely some of the ways that this often works is that the Canadian the Canadian entity owns the US entity, and that can allow you to qualify for the visa either personally or through the court.
I don't think they're talking about visas, but anyhow, David asked,
Just from a pure asset protection standpoint too, Dave, David, just to underline that, from a pure asset protection standpoint, it doesn't matter on what, to me, like what's happening on the Canadian side of things. So if you already have like a Canadian tax treatment that you like, that's like, hey, this is my Canadian asset protection that I've got going on, the LP structure is going to be the right structure on the US side of things for you to then channel into whatever your Canadian asset holding or operating companies are.
Okay, good. So David's asking, what is actually sold when you dispose of a property, the actual property or an entity, and what are the tax implications? So are people typically just selling the property itself or selling it within the entity? I think is what he's asking.
Yeah, you're almost always trying to just sell the asset out of your entity because you want your entity, right? Your entity actually has other things that are valuable in it besides the fact that it owns an asset, i.e. like its ability to have like the bank account and a credit history. And on the US side of things, that allows you to be able to get access to business lines of credit after a year to 2 years. Typically, so I really, unless there's a really good tax reason to do it for that particular play, you're almost always just going to sell the asset and hold on to your entity.
Okay, so somebody's asking, what's your website, Scott? So I don't know if you're able to put that in the chat box.
I did type it in the chat box. I don't know if everybody saw it because it says organizers and panelists only, but it's royallegalsolutions.com. So it's www.royallegalsolutions.com.
I'll copy and paste that right now. I guess
and guys, if you go to, as David's looking at copy and paste that in there, I'd say either clicking on that meeting link and go ahead and scheduling the meeting. If you already know it's what you want to, that you want to have a conversation about it, about this, that's the best thing to do, right? And there's no cost to have that conversation and for us to give you all the information that's associated with it. If you go to royallegalsolutions.com, what I recommend doing is going and clicking on the link at the top of the page that says take a quiz, and then filling out that quiz information, because that's how we typically find out all of the key information that we need to be able to make the recommendations. That's going to expedite you to the ability for us to be able to start making recommendations for you. So it's either, if you're ready to have a conversation, click a meeting link, or if you want us to send you more information, go to royallegalsolutions.com, click the tab, take a quiz at the top of the page, take that quiz, and then we'll be able to send you additional information at that point.
Yeah, and you guys, I see there's a lot of questions that are coming in that are super duper specific to you and your particular situation. So unfortunately, this is not like a radio call-in type thing. This has to be stuff that's kind of applicable to everybody. So again, you guys book a call with these guys if you want the specific details about your actual situation. We can't take everybody's time.
Listen, it's kind of like I said at the beginning too, is that unfortunately or fortunately, way too many companies do approach it as one size fits all. And that's part of why when I met Scott, he resonated with me right away, because even though this is the most common way that it works, it doesn't necessarily mean it works for absolutely everybody. So we need to have those individual conversations, and you need somebody to manage the process with you. So that's why we work so well together. It's kind of seamless. Like every single time, he's like thinking things before I am. It's kind of crazy. You'd think that we'd known each other for like 20 years.
All right. I'm sorry, I'm just trying to go through some general type questions. We had a ton of questions came in ahead of time. So somebody's asking, do I need a license that allows me to invest in the US? I think we've answered that. Nope. Just need to
Absolutely not.
Cover your
Just
butt.
need a little money. But sometimes you don't even need a little money. Sometimes you can buy properties at like literally a couple of $1,000s.
Well, you need some money.
Sometimes you can find the properties and own it with somebody else. Let somebody else put up the money is my favorite way to do it. I like to find opportunities and then let somebody else put up the dough.
OPM.
Yeah, exactly.
Right,
so
Dave?
This is possible within these structures, you guys. It's if you're getting into super big money and doing funds and stuff like that, then yeah, you need to get a securities person on board. But if you're doing a joint venture with somebody else, friend, family member, accredited investor, you should be just fine. All right, so again, a lot of specific stuff. That was answered. So after investing in the US and having rental properties and living in Canada, can you change that into having rental properties and living in the US and still have properties in Canada? That'd be a good question for Laura. So yeah.
100%. You can have property in Canada. I have property in Canada. I mean, I don't live there. I'm now happen to be a dual citizen, but before I was a dual citizen, you're Canadian. You can own property. Even if you weren't Canadian, you can own property. You don't have to be American to own property. Okay, you have advantages of being American and owning property, but sometimes there's also disadvantages. So the two countries are very open for business. Well, normally.
Yeah, just hard to get there sometimes.
Outside of COVID, you know.
Yeah. Let's see. So Tony wants to know what's the specific visa that you mentioned.
The E2 visa, it's a treaty investor visa. It's based on a substantial investment in a non-marginal business that creates an economic impact for the region and the country. What does that mean? That's why we have to have a conversation. So
Yeah.
substantiality is actually dependent on the type of business into which you invest. So in real estate, one of the issues is most immigration lawyers, I just actually saw it in an immigration lawyer Facebook group I'm in, very high end for E2 visa practitioners. They said, how can my client invest in real estate and get an E2? Isn't real estate passive? Yeah, that's why we have to figure out how to turn what's otherwise looked at as a passive investment into an active business, because you have to have an active business to qualify for a visa.
Lauren, I just have a question for you on that. Does that also work for, say, like if you found active companies that you wanted to like invest into or like loan money to and say, hey, like
No.
I'm participating in that, or you actually need to be a part owner in that company?
No, you need to be at least a 50% owner in the company. Now, in that model, let's say you have somebody, and Dave, this is actually applicable to what you do as well because of the capital. So let's say you could create an investment company that could invest in different assets. But the key is when you're developing this model for immigration, you have to show that you need boots on the ground. If all you're doing is becoming an equity partner in a business or businesses, even 100 businesses, okay, and you're not like let's say Richard Gere in Pretty Woman, and here I age myself, but whatever. You know, he was the turnaround guy. There's lots of turnaround guys. There's going to be even more turnaround guys now. But if that turnaround guy goes in and actually turns the business around, that's different than if that turnaround guy just invests money to help somebody else turn it around. So again, it's each individual business needs to be actively involved and need boots on the ground. You're managing and directing the business.
Is it easy for Canadians to get a mortgage in the US?
It depends. That's a good lawyer.
How is it easier? How about that, Lauren?
Pardon me?
In what scenario would it be easy?
So first of all, obviously, if you have US credit, it's much easier. If you have a US partner, it's easy. If you have a joint venture partner that has US credit, if you're investing in a commercial building, sometimes it's easier because commercial buildings, and this, as soon as you're in 5 or more units of a multifamily, you can be in a commercial building. So commercial financing is a little easier to come by because it's not only based on your credit score. And you know, here in the US, unlike in Canada, your credit score dictates everything. It's like the be all and end all. It's much more so than in Canada. So when you are dealing with a commercial property, it's also based on the returns on that property. So you're going to show tax returns, kind of like buying a business, right? So again, it's all about what is your creativity around the financing? Yes, I also have partners that finance foreign nationals.
Good.
Not just commercial.
Scott, any input on that yourself?
No, I think Lauren knocked it out of the park. You know, I think one of the things is that we offer, and one of the reasons that Lauren and I team up so much on this is because it's not just the two of us. It's actually like a team of people that we've been working with to know like who are the right partners to put into like particular scenarios. So it just saves people a lot of time and money and having to do all of their own vetting process. you know, and we're not paid anything like extra for that. That's just extra value that we bring to the table.
Okay, sounds good. Daniel's saying he was looking at the link for Royal Legal, refers to booking a meeting with Edward.
Right.
Is that what's intended with the introductory call?
Yeah, so what'll happen is that you'll have the introductory meeting with Edward, and that's how we do like all of our process to make sure that we have all the information that's needed from you, that you're qualified to speak to us, to make sure that you're somebody that we can actually help in the very beginning, and then you'll go into a separate meeting with an actual attorney. So Edward's not an attorney. Edward's our appointment setter and the person that helps get all the information, prepares everything. So the time with the attorney is most focused. So please book a meeting with Edward at your earliest opportunity.
Cool, very good. All right, you guys. A few other questions that come in. Do we need
we
an
can,
American
we'll
tax
be
ID?
happy to answer questions after if there's, we're not, it's not like we're saying goodnight tonight when we say goodnight and we're never going to talk to you again. We're here for you.
So how do they get a hold of you?
No,
Yeah.
no. I'm not telling them that. No, I'm just kidding.
No.
I'm just kidding.
Yeah, because we're going to shut this down in about 5 or 10 minutes, you guys.
So the best thing is there is a link on both of my websites to apply for a consult. And also when you do the download, obviously I'm capturing your contact information and you'll be receiving an email and, inviting you to ask questions, just like with Scott. We are truly I really go out of my way to help and work with my Canadian clients and make sure, this is really, really important, guys. I'm not going to necessarily tell you, I do things in order. I like to do things in order. We want to make sure that we set you up with the right professionals at the right times so that you don't rush into things and run before you walk, because it's a big deal. And especially if there's a visa involved, but even if there's not, somebody called me the other day to set up an LLC. I'm like, no, that's not, I won't do it. A few $100s in my pocket is not gonna, I want you to talk to Scott. I want you to talk to my tax guy, and then we'll set up the entity.
Okay, sounds good. So basic question, do we need an American tax ID to invest in the States?
No, you just need no, absolutely not. You'll get a tax ID with your LLC or your entity, but you don't need a tax ID to invest. Dave, I don't know if you shared my podcast, which Dave has been on my podcast. Scott has been on my podcast. I've been on Scott's podcast. I've been on Dave's podcast. Here we are today. But really and truly, my podcast is very, very helpful for cross-border investors. There's a couple of
podcast.
Pardon me?
Just type in the link to your podcast.
I did. But you have to share it because I can't.
Okay.
Yes, I did. So it's called Investing Across Borders, and there are some wonderful guests on there. One of them, his name is Jay Facette, very big influencer out of Calgary, never planning to move to the US. Okay, but I got his visa during COVID actually. So Imana Guy, another big influencer. It's an opportunity to learn things. I have some clients that listen to every podcast. Somebody told me today, Scott, the gentleman we spoke to earlier, he said, I'm going on the bike now to listen to your cross-border webinar. I'm like, I've never heard that before, but okay. He goes, that's what I do every day. I listen to one of your podcasts when I'm working out. I'm like, okay, whatever works. So
good stuff, you guys. So you guys, I see there's some specific questions about where should I invest in the States. That's beyond the scope of what we're talking about here today. These guys are not here to tell you exactly what kind of real estate investing to do or exactly where to do it. That's your job, and that's beyond the scope of your lawyer.
I can tell you that for anybody that comes to our website and signs up for our newsletter, we do talk about that for where do we see hot markets emerging. So if you're looking for anything that's in depth about like how do I accomplish financial freedom through real estate investing, how should I be thinking through some of the details around like where is investing, what type of assets, how do I form the right kinds of relationships into that, those would be great things to connect with Royal Legal Solutions about. And we have systems, processes, and information that we put out regularly about that.
yeah.
Fantastic.
And it will be part of the strategy that we build as well.
Yeah, of course, right.
Sarah's asking, can a Canadian become a real estate agent? I'm assuming she means in the
Oh
States.
my God, you guys have got some great news for you. Literally, as we were getting on this call, like I was on a call because I'm with EXP and we were doing an agent attraction call right before. And as I'm on the call, the broker from Missouri wrote and said, yes, Canadians or anybody that don't have a social security number can get their Missouri real estate licenses. I've been working on that for the longest time. I believe it's also true for Washington and possibly Montana, but I have it confirmed for Missouri. So it's a very big deal because unlike in Canada where it's like a year in Ontario or like some crazy amount in BC and it's a fortune, kind of like being a lawyer is a fortune there. I pay more to be not practicing in Ontario than I do to be practicing in the US. It's kind of funny. But anyway, it cost me $32 a year to renew my real estate license here, and it was a 63-hour course.
Wow.
Okay.
Nice. There you go, Sarah. So you can reach out to Lauren about that.
Yeah.
Good stuff, you guys. Fantastic.
Thank you.
Fantastic. Again, I apologize if we didn't get to your specific nitpicky question, just because I don't want to get too much into the weeds when we got a whole bunch of people on the call who might not have the faintest interest in your specific situation. So again, reach out to these guys if it makes sense. This whole webinar is really just a public service to introduce you to a couple of great team members or great potential team members, because you guys, over the years, I've just seen a lot of Canadians have a lot of frustration about how to invest in the States, how to not get whacked twice by taxes. We've all, no, not all, but I've heard of different nightmare scenarios where people have bought properties in the States and they weren't set up properly and they either got double taxed or they got into a bunch of litigation. They got sued and they weren't set up properly and didn't have all the smart stuff that Scott was talking about there in place and lost a ton of money. So there's tons of opportunity in the States, you guys. There really is. The prices are so much, in a lot of areas, are so much more reasonable than they are up here. There's a lot of opportunity there, but it's a slightly different game. You got to be set up properly. You got to have, the proper legal structures so that you can do business safely down there. So I just wanted to introduce you to a couple of potential team members. There's, nothing for sale here. I'm not being compensated in any form whatsoever, except for nice warm fuzzies. And hopefully I can introduce you to people who might be helpful in your life. That's what this is all about here tonight. So Scott, thank you very much. It's been a real pleasure. Lauren, as always, real pleasure. And I want to thank everybody that's been on the call tonight and encourage you, if you're seriously interested in it. And again, don't waste these guys' time, you guys. You got to, be considerate, but reach out. And if this is something you're serious about, connect with them. All right. Any last words, Scott or Lauren?
Yeah, I'd say that I'm really fascinated with everybody's particular situation, and I know my team is as well too. So if you have an inkling of a curiosity, I want you to reach out. I want you to schedule a meeting. I want you to talk to Edward. I want you to fill out the information that's there on our website when you go to take a quiz. And I'd say if you're just even curious about it, come in, book that meeting there, find that link there with Edward, book that meeting with Edward. Once we have that basic information, guys, we're going to be able to start sending you targeted and specific information for people that are just like you that we've helped, because that's what we do time and time again. We profile exactly what you have going on and we make specific recommendations for you. And you don't have to pay us anything to have that as a Canadian looking to invest in the United States. So book that meeting with Edward right now.
Perfect. Lauren?
I'm going to add one more thing. I just realized that my survey does not appear on the websites I shared with you. So Dave, I'll share a link so that if they wish, it's a cross-border investment survey and you're welcome to share it. And that will also take you into signing up for a consult with me. And really and truly, it's my pleasure to help Canadians. I feel that there's just, I was a political science major before I went to law school, and we used to learn about the US and the impact of the US and, all this stuff. And then I was like, you know what, when I get there, I'm determined to make a difference for Canadians. And I'll share one last thing with you. So the reason I do what I do, as I think Dave knows, and I know Scott knows, is that on my return trip from my honeymoon in 2007. I got married in January 2000, December 31st, 2006. Went on my honeymoon return trip. They decided that my then husband was inadmissible. So we went to Chicago. We were in Thailand. We flew through Chicago O'Hare Airport. He was expeditiously removed, put into immigration jail, deported, and removed from the country and barred from entry. So I've been through it all personally, and I've lived to tell about it. And that's actually what prompted me to become an immigration specialist as opposed to an in-house corporate lawyer, as I was doing before, writing contracts and coordinating like I'm still doing in a different way. So just don't let that crap happen to you. Okay.
For sure. Well, you guys, it's been a lot of
Thank
fun.
you, Dave.
Thank you very, very much. Lauren, Scott, thank you guys. I really appreciate you taking some time out here, guys. And
Thank you.
at what lawyers charge per hour, you got a hell of a good deal for this free webinar.
That's for sure. Absolutely. Thank you so much, everybody. Take care and stay safe, all right?
All right.
Thanks,
Bye for
guys.
now.
Take care. Bye-bye.